Great. I think we'll get started now. Thank you, everyone, for coming today for the workshop with Jen Bogwald, my friend here and in Nanaimo, and she is going to be talking to us about the Canadian Employment Wage Subsidy. I would like to let you know that Jen is a CPA and a business advisor with MNP. Jen works with a wide range of business owners on Vancouver Island, including tourism operators. While we are all new to the government programs Jen works with, a team of professionals at MNP who have been collaborating on behalf of their clients to help address questions as they help their clients navigate these unprecedented times. So today, folks, Jen will go. It'll be 30 minutes. Hannah is helping us tabulate all your questions, and we'll get to a few of those at the end. And we will be attempting to answer all your questions that we don't get to today. So thank you once again to joining, Jen, for joining our British Columbia Tourism Resiliency Program. You're talking to businesses province-wide, and I'll pass it over to you. Thank you.
Thank you, Anthony. Like you said, it is unprecedented times, and we're doing the best we can to help support you guys. I know there's lots of questions out there, so there will be time for that at the end, and the team will, if they're not addressed today, we will help get you guys through this. So I did want to, before we get in, I've prepared a couple scenarios with the calculator so that I can help describe the various nuances of the program. But before we get into that, I did want to mention how important the My Business account is. If you've never used My Business account, you'll want to go online and get registered as soon as possible. Unfortunately, part of the process of registering for My Business account requires the CRA to mail you something. CRA right now is really, really slow due to COVID, due to everything. But it's really inconvenient for business owners who are relying on the cash flow of this program. So the other option is to have, maybe your accountant has access through My Account. And if they are able to access online, that can be another option, is that you can do a bunch of the calculations and discuss with your accountant. They can submit on your behalf. So I wanted to put that out there. The option to waiting for the snail mail is honestly to try phoning CRA. But in the last couple of days, we've been having calls drop. You'd be on the phone for 2 hours with CRA and they'll drop the call. So try to get on that My Business account, see if you can get that set up. Also wanted to mention a bit of a note of caution. There's a lot of conversation out in the communities around how do we maximize benefit of this program. So I want everyone to, and with tourism, you guys are tourism operators, you guys are in dire need. But you may hear people out there saying, well, how can I get, more funding if I add my wife, if I do this, if I do that, or, because I fit this criteria, I could apply for that. There will be penalties, and, the penalties for falsifying or applying for aid when you really don't need it will be significant. So it's a word of caution that, the government's worked at record speed to get to where we are today, but there's still some holes in what they're presenting. And if this is not a time, this is coming from a tax accountant, this is not a time to plan into these things and take advantage of any loopholes. So what I'm going to do is I'm going to take you guys to the government's website, which they have actually done a pretty good job of creating a website that is pretty easy to follow. So I'd like to take you there to start. So some of you may have already been on this website. For me, when I read through it, I think, wow, this is a great, easy tool, but a lot of the terminology in this is something that's more familiar to me. So I just thought for business owners out there, some of the terms might be a bit of a hold up for people. Eligible employers, it's going to be pretty much everybody, honestly, and tourism operators. So I don't expect any surprises there. If everyone's gone through the fact that you can't just apply for this program if you're not in a dire situation. So the revenue reduction is really important. So I know the session's more on the calculator, so I won't spend too much time on this, but it is really important that as you determine your eligibility, you keep a file of that information, and because at some point they will ask for support on this, so do keep it. There's a couple different options, you know, to compare with the same month as last year. There's to do the average of January and February. I would think for most people it's going to be comparing to the same month as last year that's going to work, but every situation is different. A lot of our tourism operators have gotten deposits for services not yet performed. The receipt of deposits is not actually revenue, so you've got to be, you know, discuss that with your accountant and decide which method is going to be best for you, because there's some nuances to the eligibility that is very important that you review it carefully. But as I said, a lot of you guys are tourism operators which are significantly impacted, so I don't imagine that's going to be too hard to qualify. Eligible employees, again, there's a lot of employees that are eligible, and we'll go through some scenarios. There's some complexity there with people that have been forced to stay home because they aren't able to work. If you're willing to pay them, but they're not working, you can actually have them on payroll and claim the CEWS program. But in general, it's going to be people that are put back on payroll that are applying for this program. Do they actually have to work? No, they don't actually. So under this program, it would be that, yes, you think that you want to keep your team intact, so you're wanting to hire them back. But do they have to log timesheets? Do you have to have proof that they're working? No. So it's kind of come down to the cash flow ability for you to be able to pay their salaries and to remit payroll remittances. So hopefully that helps. And then there's this conversation of related versus, arm's length and non-arm's length. It's a very accountant-y term. So I'd like to think of it like your COVID situation. People that are within arm's length of you is your family, right? So everyone that's related by blood is within arm's length. There is a very detailed definition of it on the website as well as you work through it. But non-arm's length is people that are, sorry, I'm getting it backwards. Non-arm's length is closer to you than your arm, and arm's length means that you're independent from them. So you're further than an arm. So I think I really just confused everyone here, but basically if you're working at non-arm's length, then you're in your family circle, you're related to that person. If you're working at arm's length, it means you're not related to that person. Again, I'll go through the demo as we work through this. So as you go through this website, it'll take you right to calculating your subsidy. And they have created a couple different versions of this spreadsheet. I'm bringing up the most current version for you, but you just download it straight off of their website. So and then what I'm gonna do is, for purposes of this, I've kind of created a scenario, which here's the assumptions of the people on this payroll is that they're being paid bi-weekly. All the employees were laid off March 20th. All employees went on the CERB, the $2,000 a month, as soon as they were laid off. And there is work to be done, but not as much as before. So really, these employees will be doing more behind the scenes planning to get back to the reopen stage. The owner, his name is Mike. Mike hired back as soon as he heard that this CEWS program passed legislature on April 11th. He hired them all back April 12th. And so before then, we hadn't seen legislation. And when it passed the House on April 11th, we now had comfort that that money is actually coming back to our business owners through this program that the government had been talking about for weeks. So And Mike confirmed that all of these employees that he hired back would not continue to claim CERB. So it's important that when you're putting people back on payroll, they're not also claiming the $2,000 a month. If that's happened, the government will do some reconciliation and they may have to pay some of the CERB back, which isn't the end of the world, because in theory, then they're on payroll, right? So I'm going to share with you my calculator with the scenarios. Let me take 1 second here. There we go. So the first person, so if everyone can see that, yes, good. The first person, so here's the calculator that the government has put together, and they've tried to make it easy for you by putting together this template. It does, if you pick, so in Mike's scenario here, we're picking the pay period. So on the very first page is kind of a summary page. It allows you to pick the pay period that we're referring to. So the spreadsheet is referring to a month, 2 pay periods essentially. It gives you an option to do batches, which I personally haven't used yet, but if you had a whole bunch of employees, this may be helpful with same case facts. Gives you the option to do weekly or bi-weekly. I've chosen bi-weekly, and every one of these employees that I've got on here all have different facts. So I've chosen to do this method, which is going to allow us to enter it in employee by employee. And then once you've done that, this summary page will show you how much will be covered by the CEWS program and how much is what they're calling eligible remuneration and how much the CEWS program will cover. So these numbers will then, when you go back to that registration page, those are the numbers that you're going to use to enter into the My Business Account application. So if we go to, we'll start with our first worker that got paid back put back on payroll. So Jane works 12 months a year, and before COVID, she worked for the company for many years. She gets paid about $55,000 a year, and she's a salaried employee. So the first thing in the spreadsheet, and Jane is not related at all to Mike. So the first question is the employee at arm's length? Yes or no? So yes, Jane is at arm's length. She's not related. So, and then this next column is what we call the baseline. So does she have wages paid by the company before COVID essentially hit? So what they want us to do is calculate an average biweekly payroll to create a bit of a baseline. And this is done intentionally to avoid people from planning into this program. So yeah, Jane was on payroll before. She was earning a couple $1,000 each pay period. And we've put her back on payroll 100%. Her job is really key to this business and keeps the owner sane. So she's gone back on payroll. So then you put her payroll in here. And then the program is going to cover 75% of her payroll. So you can see how that works through. So that kind of is the simplest example. Chris works hourly, about 12, like throughout the year he works hourly. And in 2019, he had a T4 for $40,000. January to March, his average pay was $1,500. So Chris actually took the whole month of January off because he doesn't even normally work in January. So when calculating his average biweekly pay, you can knock off months that they actually weren't employed by the business to get the correct average. So what they want to see is when he's working, what's his average, right, in this baseline period. So Chris isn't related either. So his baseline is $1,500. But Chris really isn't as needed right now. He's more in a client service role, but the owner figures they can put him back on anyways and make the cash flow work. So he's really important to the business. They want to keep him connected. So, and this will get him more than CEWS, or sorry, CERB. So we put him back on payroll, but we put him back on at just 75%. But because his baseline is actually 1,500, the program will actually cover 75% of baseline. So essentially for Chris, he's coming back on a more of a reduced basis, but because we're paying him enough, we're bringing him back on the program, and you paid him before the COVID hit, the program will actually cover all of his wages. So there's cash flow considerations. This isn't a full slam dunk. Of course, there's timing between when you actually get that pay, but it will cover that program or his salary. Lisa. So Lisa is not related either. She is actually a brand new employee for this business. Lisa is someone that Mike met through actually through the COVID crisis, and is really proficient in marketing and social media development. So Chris has decided he wants to hire Lisa back on because it's so instrumental to his reopening of his business. So she has no baseline. Lisa's never worked for this business before, but Chris hired her back on that Easter weekend. He had a very productive weekend in strategizing for his business. So he hired Lisa on along with his other employees. And you'll see the program's going to cover 75% of Lisa's wages as well. So I get that question a lot. Like, if I've, let an employee go, hired someone else back, is that going to be covered through the program? Do I have to have them having the exact same jobs and responsibilities? No, it's about having having people on payroll and having them employed, right? There's Mike. So Mike added himself back to payroll. He thought that weekend again, if the government's going to pay my wage, why not get myself right back on to where I used to be? So he was paid throughout the year $70,000 salary before COVID hit. And so he put himself back on for the exact same amount. So he is related to himself. So no, he's not at arm's length. And you'll see what the program does is it actually caps him at the max funding of $847 a week. So even though he was paid pre-COVID the same wage that he's paid, so it's similar to Jane, he's at the max funding. So the program's just going to do $16.94 per pay period. But he's related, and yes, the program will fund related people. Mike also got very clever that Easter weekend and thought, well, my wife got laid off from her business. Why don't I add Susan to payroll too? Because the government's going to pay 75% of Susan's pay. So he thought of some things she could do for the business, and he threw her on payroll. But you'll see she is related, and she has no baseline. So the program will not cover any of Susan's wages. And that's where the difference is between related or arm's length and non-arm's length make a big difference, right? So if you're at arm's length, the program can cover new employees. But family members like Susan, no, doesn't work. So Mike's a little bit out of luck there, but I'm sure he'll take her off payroll after this, or maybe she's adding a lot of value, who knows? And then his daughter, Melissa, she's always worked for the business as well. And she was added back on at the same time, and she's actually quite busy with the business, so he's added her back on payroll. The program will cover 75% of Melissa's wage as well. So hopefully that sort of overview will help people understand the different scenarios. The legislation for the program is actually quite complicated. You'll see in the drop-down box that it's been approved to June 6th, or at least there's application periods open to June 6th. And we currently don't have any more information on that. However, the legislation itself, the way it's drafted, goes to September 30th. So one can assume that we're not going to have gone through all this work just to cut it off the program another month later. I'm quite hopeful that it will be extended. Once you actually put your application in, so if we go back to the application process, it will ask you to deduct. So the amount that we calculated in that spreadsheet is what you're going to put in there. And it will ask you to deduct what you've claimed for your temporary wage supplement. So a temporary wage supplement is a 10% reduction in your payroll withholdings that pretty much every business can be claiming right now. And the way you claim it is you actually do your payroll just like normal, and you reduce the payroll remittances that you make by up to 10% of the gross pay that you're paying people. It's capped at a certain number. It's $1,675 per employee and $25,000 per employer. But really, you should be reducing your payroll remittances to CRA by that 10%. So when you get into the CEWS calculator, you'll see that once you enter in the CEWS application amount, the next step will be they reduce your CEWS payment by the temporary wage supplement, so the TWS, that you've already claimed against your payroll remittances. So if you haven't claimed any, start claiming them, because it will be reduced off of that if you're eligible. So, and once you get your whole, so that gets you your whole application process. You press submit, you have an attestation to make that this is the whole truth, nothing but the truth, and all that. Once you click that and submit, it says you'll get your payment within 7 to 10 days. So when you back this all up and you actually have to pay your employees the regular payroll, you've got to remit your payroll withholdings less the 10%. So as you're going, you have that cash flow need of the business, and then you get to claim this as a reimbursement back. So it's not the answer for a lot of businesses, but if you can carry the working capital required to do this, it can be a significant help to the business. If you haven't already, talked to your bank about the emergency loan program that's out there, please do so. Up to $40,000, and $10,000 of it can be forgiven if the loan is repaid by December of 2022. So talk to your bank. That $40,000 can go a long way as far as helping to match the cash flow needs of this payroll. What else did I want to tell you? And as far as, yeah, if another common question that I've gotten on this is the template puts it into the government's pay periods. So what happens if your business doesn't follow the government's pay periods? Well, it's a bit of a pain, honestly, because you've got to go and manipulate your data to fit into the government's pay periods. So when I use the word manipulate, of course, I don't mean manipulate, but I mean, you've got to go and calculate the average daily pay that was earned during your pay period, and then slot it into the 2-week pay periods the government has in their worksheets. So if you don't follow the government pay periods, then either start following them, or you'll have to do a bit of an Excel calculation. And I think I feel like I've forgotten something, but there's so much information out there, and yeah, I think we can shift over to maybe questions now, if that sounds good.
Yeah, that's great.
That's good.
Thank you, Jen. We have quite a few questions rolling in the Q&A and in the chat. So
Yeah.
I'll pick out a few of them for you to answer. And then for any of the questions that we don't have time for today, we will be in touch with you. So just so you know, if you don't hear from us right away, you know, we'll reach out to you via email. So one of the questions that we had is, you know, the tourism industry, very seasonally focused. So we have a lot of businesses who have seasonal employees. So what about bringing back seasonal employees who in previous years had a baseline? Can they be cut back to that 75% and be compensated for the 75%?
Yeah, good question, Hannah. And I think seasonal employees, you're right, they won't have a baseline the way it's calculated. However, as you would have seen, the program will still, so long as they're not your family members, the program will still cover 75% of the wages that you do pay to them. So you won't be in the same scenario of being able to cover 100% of the wages by reducing their work effort, but the program will cover up to 75%.
Great. Let's see. So should we take both the 10% and the 75% wage subsidy, or just the 75%?
You should take the 10% for sure. So everyone should be taking the 10% off their payroll withholdings, and that will help you manage your cash flow, honestly. And whether you take the 10% or not, the CEWS calculator will reduce your CEWS claim by the 10%. So yes, absolutely, take it up front. If you haven't taken it and you've already done a CEWS claim, you can still catch up. It gets up to a maximum of 25,000, and I believe like for payroll withholdings, let's say you've done a month of payroll and you didn't claim the temporary wage subsidy, I think you can do the catch-up withholdings in the next period. So reduce your payroll now, kind of double that month, so that in total for that employee, now you've done the 10%.
Is there a base amount of income that's been affected in order to qualify for CEWS? So for example, if you only make a small amount of money at this time of the year, but it's still down by that 15%, are there thresholds with CEWS?
No, they're not. Yeah, it'll be under the qualifying businesses, but I don't think there are. So if you've only made $100,000 in your gross revenue, and this year you're at 50,000, then yeah, you'll qualify. There's no threshold that I'm aware of.
We have a question about the CERB and the CEWS together.
Yeah.
So employees on CERB can still earn up to $1,000 in 4 weeks. So if they're on CERB and they're earning less than $1,000 in the 4 weeks, do they qualify for the CEWS?
Yes, and this is a really good question. We had this conversation this morning on our COVID call, COVID support call, and yes, it appears that you can. So long as that pay to the because the CERB is something that the employee does, and the CEWS, and so the employee is making sure that they're declaring that they've gone 14 days without income, because you've got to be really careful when you make that declaration. It's got to be accurate and true. But if in that period you did earn $1,000, wasn't within the last 14 days, then the employer that paid you that $1,000 can claim CEWS for that $1,000, and will be okay. So it's a little tricky, of course, but you can't be. They don't want you double dipping. So like you can't claim CERB and then get on payroll and make your regular pay, so over $1,000. But that sort of in between phase, there are certain circumstances that it will be fine.
Okay. And a related question to that one is, if you never laid off the employees, can you still claim CEWS?
Yes. Yeah. So there's no requirement to have laid off the employees for CERB or for CEWS.
Great.
So.
Well, we have quite a few more questions, but I'm mindful of everybody's time. So as we promised, we will get back to you, and definitely keep an eye out on the tourismresiliency.ca, where we're posting resources for these types of questions. And I will pass it back over to you, Anthony.
Great, thank you, Jen. Thank you very much for your time today. It was I learned a lot and very helpful, and given the number of questions, quite productive session. I should have introduced myself at the top. I'm Anthony Everett. I'm the president and CEO of Tourism Vancouver Island and a proud member of the British Columbia Regional Tourism Secretariat, along with all my colleagues around the province. And we're happy that we have Jen today. Thank you, Hannah, who's on the Tourism Vancouver Island team, and others, and everyone out there. We hope this helps. We're here to help you and serve you. We will answer your questions, and we are doing our best to help, and that's what we can offer, and that's one of the things that Jen's done here. So thank you, everyone. Thank you for your time, and I hope you're all well and keeping safe and moving forward in some shape or form. So thank you, and we will be back again next week with another webinar. Thanks, everyone. Thanks, Jen.
Thank you.
Thank you.